afternoon, everyone. Welcome to the Q3 and 9-month FY19 conference call of DB Corp Ltd. We will be sharing the key operating and financial highlights for the quarter and 9 months ended 31st December 2018. We have with us today the senior management team of DB Corp Ltd, Mr. Pawan Agarwal, Deputy Managing Director, Mr. Girish Agarwal, Non-Executive Director, Mr. P.G. Mishra, Group CFO, and Mr. Prasun Kumar Pandey, Head Investor and Media Relations, will represent DB Corp Ltd on the call. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's financial performance have already been emailed to you. I invite Mr. Agarwal to share his outlook on the company's performance for this quarter.
Thank you, Marini, and good afternoon, everyone. Let me begin the call by highlighting the key financial numbers. Beginning with our quarterly performance, our consolidated advertisement revenue grew by 13% to rupees 4,813 million. Circulation revenues for the quarter grew by 3% on a YOY basis to rupees 1,301 million. EBITDA for the quarter stood at rupees 1,417 million with a margin of 21% on the back of strategic cost rationalization measures and despite high newsprint rates. PAT amounted to rupees 756 million for the quarter. Let me now discuss the key operational highlights. Our circulation expansion efforts, which we have been undertaking over the last few years, are clearly delivering results now. In Bihar, where we are at number 2 position with an average issue readership, AIR, of 9.11 lakhs, based on the commission survey conducted by Hansa Leadership Research. This has translated into yield benefit and a good growth in market share. In Rajasthan, for the first time, Dainik Bhaskar has become largest circulated paper as per Audit Bureau circulation January to June 2018. In Rajasthan also, our efforts and hard work over the last 2 years are now bearing fruit, and we have seen an increase in our market share in both the local and corporate categories, with a larger increase in the local segment. Our editorial initiatives continue to be supported by 3 pillars of knowledge, idea-based journalism, and differentiating news. The focus is on ensuring that knowledge becomes the binding factor with the readers by delivering news with key takeaways and anchor points. We also continue to make associations with eminent personalities on different contemporary editorial themes to bring a wide canvas of insights and views to readers across age groups and segments. At an industry level, the government's 25% ad rate hike, which is effective from January 2019, is a welcome move for all players and will provide a strong impetus for growth. Moving on to radio business, DBCL continues to be the largest player in the rest of Maharashtra and number 1 player in Chandigarh, Haryana, Punjab, Rajasthan, Madhya Pradesh and Chhattisgarh. We had a stellar quarter as evident from the numbers. Advertising revenues expanded 39% for this quarter and stood at rupees 465 million. EBITDA doubled to rupees 202 million for the quarter, while PAT grew almost 3 times to rupees 112 million. The Phase 3 stations are already EBITDA positive and profitability has been achieved on the back of strong inventory management, program profile, cost efficiencies and growing popularity. The digital business charts a clearer way forward. We are implementing key learnings from previous quarters and have undertaken multiple measures towards improving profitability. Leveraging on our loyal user base, we are in the process of implementing strategies which will contribute towards organically building brand value. I would like to reiterate that our strategic initiatives towards unlocking the potential across businesses continue to be on track, and we believe that the same will help us deliver steady performance amidst a gradually improving economic scenario. My colleagues and I will now be happy to respond to your questions. We look forward to continuing our interactions, and please contact our Investor Relations Department headed by Mr. Prasun Pandey for any requests and queries. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Sir, congrats on good performance. Good to see ad growth coming back in double digits. But my question is on the circulation growth revenue, if you see, is now flat for the last 5 quarters, broadly 131 to 134 crore. When do you see growth coming back here? What is the reason why no growth at all for the last 4-5 quarters?
Good question. Let me just give you some background to the whole thing. If you remember, we started the circulation drive from the July of 2017. That time our total number was 50,41,000 copies. And then we kept increasing. In the quarter of March 18, we went up to as high as almost 57.94 lakh copies also, average copies. And then after that, some of the copies have come down. So this quarter, the overall number is at around 56.60 lakh copies. So what happened, wherever the growth of the copies advantage was to come because of this 2 lakh copies going down, that has been nullified over there because we have not taken any cover price increase largely in most of the markets. But looking at the overall scenario, maybe next year we may reconsider looking at the cover price also.
GDP growth rate of Bihar was the highest in the country last year.
Yes,
now your market share has also improved dramatically, and we have seen the leader out there report very muted set of numbers. So how has been your growth in this quarter? Is it now translating to the level where the market share has grown?
So we have got very good growth in Bihar, but frankly speaking, the gap between us and the competition, because we were present only in a few markets and they were all over, well, string. Now looking at the overall scenario, we still have a long way to go in Bihar. So even if I say I'm growing by some 40-50%, that doesn't make much of number because this percentage growth has to continue for maybe next 5 quarters to catch up to the level of the competition over there. Also in Bihar, I'm very positive and happy to share with you. Our Muzaffarpur and Bhagalpur editions have been already certified by Audit Bureau Circulation, and soon we are waiting for Bihar and Patna and Gaya to be also certified by Audit Bureau Circulation, which is in the process. Once that happens, we will have the advantage of the ABC rate coming to us, on a higher actual circulation. So that will also give us the benefit in Bihar.
Sir, one follow-up here. So, one is in Muzaffarpur and Bhagalpur, now with this Audit Bureau certification, how is the ad rate for you and DB Corp? Second, on a pan-Bihar basis, now ad rate, how does it compare?
Oh, I'll be much lower than my leader newspaper over there because we still have time to catch up in few markets.
Will it be half on a pan-India basis, pan-Bihar basis?
And frankly speaking, less than that.
Okay, but in the where certification has happened there, how is it?
What happens, the certification has just happened a month back. Now, the corporate market, which commands 40-50% of the ad revenue, that number will be based on the IRS. IRS is going to come out in the next couple of quarters because my Bihar number will not be captured in the IRS, which is coming out in April, because it's a 12-month aggregate average. So they will use it from January to December survey, while I was not present in half the market. So I think IRS will take another maybe 3 or 4 quarters for us to show us the number over there. Second thing, the government advertising, since I've already applied for the ABC certificate based circulation and ad rate, which has been approved now by the ABC and all, so that takes time to get into the circulation over there.
And the last question, digital again has been in terms of revenue 12-14 crores for I think 7-8 quarters. So I see more focus on cost control, but what's the revenue strategy? I see digital for everyone growing at 30-40%, not print less, but in general I'm saying digital ad revenue growing at 30%. Forecast is also 30%. So what is your strategy here?
So on digital, what has been cut down for us is our social revenue. And our brand revenue has grown much higher than our social revenue. Our strategy when we started cutting cost and also making a sharper promise for the reader was to come directly to our sites using search or coming to our Facebook, but not using paid promotions or not depending too much on social. So now happy to share with you, we are now equalizing our share of traffic from all platforms, and we are no longer dependent on aggregator apps. We also have our own app which is doing really well now. So we are very optimistic about the growth on the top line also coming, as while we drive the EBITDA positive for digital, we are also now looking at an aggressive growth in the next year on top line.
Okay, sir, that's all from my side. Thank you.
Thank you.
Thank you very much. Next question is from the line of Yogesh Kirve from Batliwala and Karani Securities. Please go ahead.
Yeah, hi, thanks for the opportunity. So just speaking from your interview to one of the media channels, so the election impact was about 200 basis points on the print advertising and 700 basis points on radio. I guess I'm correct.
Yes.
So my question is, is this referring to the gross impact of higher advertising from the political parties, or it is a net impact after taking into account the fall in the government spends as well?
So this 2% is net off. So supposing that the growth was 8%, but the decline was 6%, the regular advertising, so net is 2% growth.
Okay, so this is a net impact, right?
Yeah. For the benefit of everybody, let me explain. This 13% ad growth which has come on a console, out of that, only 2% is the direct advantage of the election which has happened in Madhya Pradesh, Rajasthan and Chhattisgarh for us. 11% growth has more come from the regular festive and the regular categories as such. Because what happened, because the code of conduct comes in picture and the regular advertising of government, all the tenders and extracts, they are stopped. So there's a decline of the government advertising, but the election advertising, kind of covers it up. So net benefit is 2% from there.
Okay. So that's helpful. On the, if you keep aside the government and the election advertising in the coming quarters, so based on the ground reality, then what sort of expectations we can build over the next 12 months in terms of the print advertising growth? So are we looking at sort of an high single digit or sort of an growth? Is that possible?
See, I can talk about the past of 2-3 quarters and discuss with you that, and the future is crystal gazing for everybody. So if you look at the various categories like education, automobile, real estate, they all are showing an uptrend, which is positive for us. Government also has been positive overall, except this quarter where the government revenue went down, but the election revenue came in and kind of made good for that. So looking at the overall scenario and the general elections happening in the month of May, so I think we are positive going forward based on that.
Okay. And so secondly, in terms of the, again, coming back to the circulation, now I think at the end of the second quarter, we were looking at double-digit revenue growth from the circulation revenues. So what is really changing? So is it the reduction in the number of copies or the pricing part is not playing out? So what really is happening over there?
So frankly speaking, nothing is changing. As we discussed with you, we were not very keen to increase the cover price for a while, and we are sticking to that. Next year in 2020, we will reconsider our decision for the cover price increase. And the overall copies which went up to almost 58 lakhs, now it is at 56.6 lakhs. So there has been a decline of around 2.5 lakh copies. That decline I would call more as a maturing of the copies in the market. So, for example, in a Bihar, in a Gujarat, in Rajasthan, Haryana, Madhya Pradesh, wherever we increase the copies, and some percentage copies always get matured and comes down. So I think that's the impact of that.
Okay. And so in terms of radio, so even after adjusting for the sort of an election benefits, still the growth is in close to 30%. So what is driving this thing, and do you believe this sort of an growth is sustainable over the next few quarters?
So what came in this quarter was, higher advertising from real estate category, and also we expanded our inventory to weekends. Our weekend inventory was not fully utilized. So while Monday to Friday were fully utilized, but Saturday, Sundays were not utilized. 9 to 12 p.m. was not utilized. So we've expanded those, and hence we pushed inventory by a double digit to get this growth. So we are working on yields now. Our next charter is to increase our realization yields in key markets. Our key markets are doing very well. The legacy stations have done very well this quarter, and we are focusing on those to maintain a pace.
So this expanded inventory, can this sustain in the coming quarters, or it was just focusing more on the festive season?
Inventory has been utilized, so that drive will continue in the coming quarters. Of course, Q3 was also a high demand quarter, so we could actually utilize all of that inventory. So going forward, it'll have to be a mix of inventory and improvement of yields.
Right. And just finally, what was the net cash at the end of the quarter?
95 crores, please.
95. Sure, sir. Thanks for all the responses and all the best.
Thank you.
Thank you very much. Next question is from the line of Vivekanand Subbaraman from Ambit Capital. Please go ahead.
Hi, thank you for the opportunity. I see that in the emerging businesses, your revenue has grown at a very healthy pace. But at the same time, I also note that the investments in these businesses have also been stepped up. Can you explain to us what are these investments directed at? Because logically, for such a revenue growth, your losses should have reduced, but that doesn't seem to be the case. Second question is pertaining to the newsprint prices. I noticed that your inventory levels have been rising, from 80 to around 93 days now. So what is the pricing outlook, and what will be your strategy to handle and mitigate the raw material price volatility? Thanks.
Okay. So yours was a very loaded question. Let me try to answer one by one. So let me take the newsprint thing first, which you mentioned at the last. So as you know, in the newsprint, we all witnessed the Q3 was the most expensive newsprint blended used by us, because in the last 3-4 quarters, whatever the prices went up, Q3 was the peak of that. And after that reason, in Q3, we were using the newsprint price in Q3 was almost 45,300 rupees odd number as the blended cost of the newsprint used, which was almost 28% higher than the last year quarter, which was 35,500 in the last year quarter. Now, the indications on the newsprint fronts are all positive. Let me start one by one. The first one is that the peak of 750, 780 has now come down to $575, $600. And we are still hopeful that 575 may further go down to 550. The impact of all this will be started seeing from the first quarter of the next year, because this quarter also we are using the newsprint which we already bought. That's one. Second thing, small good news is that in Russia and US, certain newsprint making industry companies, those who are shut down, they are starting up those facilities again. Though not very big, but still happening. So I think that will be further advantage to the industry. Third thing is China. China, if you notice, their import of newsprint has come down by 40% between the month of September and October. Because of that, suddenly the newsprint prices in the world is softening down. So on newsprint front, we are very confident that next year will be a normalized year as far as newsprint is concerned. Coming to your next point of the investment in the emerging markets. So as you know, in the emerging markets, Bihar is one of the large emerging market for us. And as you know, Bihar, we completed our rollout last year in the month of January of 2018. So I think that kind of investment was very much justified for Bihar. And the kind of results what we are getting from Bihar, we are very encouraged by that. Have I missed out any of your other point?
Just one small follow-up on the emerging businesses. So the increased OPEX that I see in the emerging businesses, that is primarily investments in Bihar, or is it something else?
Yeah, largely Bihar, because if you see our emerging markets area, Gujarat is a very small Hindi edition of Surat, which is hardly anything, but large is Bihar.
All right. So then your investments, you mentioned that you completed your circulation drive expansion by January. So, in the recent quarters, what are the real other initiatives that you have taken where you've had to invest more in Bihar?
So continued booking the copies, rebooking those copies, ensuring those reader schemes are continuing for them, branding activities, everything. Because you just can't leave the market on one particular day saying that everything is done, so I'll now withdraw everything. We have to do it gradually over a period of next 3, 4, maybe 6 quarters.
Right. I have more, but I'll come back in the queue. Thanks.
Thank you very much.
Thank you. Before we take the next question, we would like to remind participants that you may enter *1 to ask a question. Next question comes from the line of Ayaz Motiwala from Nivalis Partners. Please go ahead.
Yes, good afternoon. Thank you for the opportunity. So the first question that I would want to start off on, which you mentioned as a last sort of line, that there are certain strategic initiatives which are being taken which will create value in a slowly improving market. Yeah. Can you explain what was the meaning of this? I couldn't understand that, sir.
So, for example, in Gujarat, Rajasthan, and Bihar, the number of copies we have pushed in last 1 year's time, added on new customers. That's a cost on the company right now. But those copies are going to give us the advantage. For example, with Rajasthan, we have become number one as per Audit Bureau circulation also. 16 lakh plus copies in that market now overall. As per ABC, 15.95 lakh copies as such. And we are clearly seeing in last 4 quarters, there's been an improvement in the market share on the advertising in case of Rajasthan. So every quarter we are able to see 1%, 1.5% growth happening in the market share in Rajasthan. Similarly, in Bihar also, we are clearly seeing we getting added on to the various campaigns in Bihar. And also we are seeing the new rates in Bihar are getting implemented. So these are the initiatives which we have undertaken in the market and are giving us the result.
Sure. Okay. Thank you for that. And the second question, more from a medium to longer term point of view, which essentially relates to circulation and your sort of strength of franchise on a long-term basis. So, you know, digital has grown out of nowhere to be 15 to 20% of Indian ad spending. It seems it's picked up slack from TV and press, but more from an incremental point of view in the last 5-7 years that this has been built out. So as we talk about your circulation, can you explain what is the age profile of the readers which are coming into the franchise? And is it, as it looks like, a whole generation of young people just skipping and going on to reading newspapers or other forms of information through, sort of iPads or tablets, etc.?
So what we are seeing in our market, this copy which is coming in is coming largely from the age bracket of, I would say, people ranging from early 30s going up to mid 40s. You know, that's the buyer, those who are coming in buying our copies. And yes, you are right. These people are also now reading news through different mediums also. But that doesn't mean they're stopping one of the mediums. So they are reading my paper in the morning, and during the day through my app, they are getting the news, or maybe through social media. So they want to be connected more.
Right. So, what about the demographics of the younger people? I mean, the people who just entered the first job or college, etc., the 20s, are they not interesting demographics for advertisers, and thus you are not chasing them, or they're not actually wanting to come in?
So what happened, if you notice in all these markets in India, barring out the metros, we still follow a semi-joint family system. If you notice, we don't have 100% nuclear families living in this market. So if a person who is of 45 or 50 years of age, he buys a newspaper, then maybe his younger brother or maybe his son is also reading that newspaper. He may be 18 or he may be 25. So
sure.
At the 25, you can't decide on a paper on your own. So you live in with your parents or you are living in with your brother or somebody. So that guy actually takes a call on the newspaper and you also become a reader.
Right. Okay. And lastly, you just on the newsprint, and I have a few more questions. I'll queue up again. You mentioned that next year should be a more normalized kind of year in newsprint.
Yeah.
If you look at some of the data shared by Mr. Pandey and his team, the last 5-8 years, we've talked about newsprint in this ballpark of 37,000 rupees per ton, which was what was your comparable benchmark last year.
Yeah.
And as you mentioned, that the prices in dollar terms are down to $560, $570 US.
Yes.
Are we implying that as the normalized number, this 37,000 as the way forward for the business?
Maybe on a conservative basis, yes.
Yeah.
You know.
Okay.
For example, if I
I just wanted to understand on how the business is not, overly dependent on newsprint prices being benign, but has an ability to stand on its own feet.
Yeah, you're right.
All right, sir. Thank you very much.
Thank you.
Thank you very much. Next question is from the line of Jay Doshi from Kotak Securities. Please go ahead.
Hi, thank you for the opportunity.
Yes.
Just a quick bookkeeping question. So at $575, that's for the imported newsprint, given the mix that you are using between imported and domestic, what would be your blended average price be? Let's assume if you have to buy at spot price, both the domestic as well as imported, where should it be, versus 45,400 that you reported on a like-to-like basis?
So let me put it this way. Last year, our Indian newsprint rate was around 35,000 per ton, and imported was around 37,000 per ton in this quarter, last year. This year, the Indian is at around 44,000 and imported is around 48,000 something. So average is 45. So we are hoping that this 45,000 average should go down by, 23-24% next year.
Oh, thank you so much. That is very helpful. That's it.
Thank you. Next question is on the line of Gaurav Agarwal from ENR Advisors. Please go ahead.
Good afternoon, sir. Gaurav here.
Good afternoon.
Just 2-3 questions. One is on the environment side. You have 3 areas like local revenues and then national revenues and government. So you mentioned about government, they're doing well, at least in Q3, and also in the next 1-2 quarters, they look good. How about the other 2 segments, the local category and the national category? If you can highlight their performance in Q3 and how are they performing in the current quarter and what is the outlook there?
Okay, so I think local is doing better, and as of now, national is also doing better. And we hope that in the next 2 quarters, which we clearly see, the local will do better than the national because of the elections happening. So there are a lot of activities on the local market. So that's what our take on the next 2 quarters.
Okay. And sir, for the full year FY20, what kind of growth do you see in your advertising revenue? And in that, how much of the election benefit are you assuming?
So as I mentioned to you, this quarter we have an election net benefit of 2%. We hope that going forward in the general elections, this percentage should go up. Also, since government has increased the advertising rate by 25%, that advantage should also go over and above that. So considering all that, we are hopeful that the results what we have shown in last 3 quarters, going ahead we should be able to show up better results than that.
Sir, for Q3, can you share the YOY growth for these 3 categories, local, national and government?
Okay.
Even if you can give it for local and national, that would be very helpful.
Okay, so let me, I won't be able to give you the exact breakup, but just to give you a ballpark.
Broad would be fine.
Yeah, ballpark indication, as I mentioned to you, government, considering including the election, went up very marginally, 2% growth because of government, because government actually went down, but election revenue came in, so 2% because of that. Real estate showed a huge growth, almost 40% plus growth came from automobile and real estate. Banking finance actually went down by 30%. And FMCG also wasn't very hot in this quarter. And the national, it's been a good quarter for national so far, while local also did decent number.
Okay, so is it fair to assume that national and local would have grown by, let's say, 16-17% on a YOY basis?
No, because if they would have grown 16-17, both of them, then my overall number would be more than 13, no?
But your government, you said it has grown only by 2%.
Yeah, but the government is hardly 10% of the overall number contribution.
Okay. Fine. Thank you.
Thank you.
Thank you. A reminder to the participants, to ask a question, please enter star and 1. Next question is from the line of Prateek Jain from AF Enterprise. Please go ahead.
Yeah, hi. I wanted to ask, what is the situation regarding ad yield in emerging and as well as the mature markets?
So in the mature markets, the yield is flat, while in the emerging markets, the growth is coming in.
And roughly by what will be the percentage, if any ballpark figure you can give?
Frankly speaking, in our emerging market, I won't really look at the percentage because Bihar is a kind of a new market for us. So over there, if somebody was paying, say, for example, 10 rupees, now he's paying 25 rupees. So I can't call it 150% growth for simple reason because those markets I was not even present there.
Right. Okay. And what are the ad volumes that you are doing in these 2 markets, emerging and...
So overall volume, if you look at, we are almost flat volume. I think, sorry, 1 second. So flat in the mature markets, but in the emerging markets, the volume has come in. So the growth has come because of that.
So in the mature markets, both the volume as well as the yield is flat?
Yeah, volume is there, but hardly much, and yield is flat.
Okay. So you have any plans to invest anything or increase your revenues from the mature markets?
So we are all putting all our effort, like the circulation what we have put in Rajasthan and Gujarat, for example. We want to have the returns coming from there, and that we are seeing now in Rajasthan especially, that their market share in advertising is improving.
Okay, thank you. That will be all from my side.
Thank you, sir.
Thank you. Next question is from the line of Vivekanand Subbaram from Ambit Capital. Please go ahead.
Hi, thank you very much for the follow-up. Girishji, did I hear you mention that you are witnessing good growth in real estate? Is that something you mentioned? And can you detail that a bit more on market trends, say MP, Rajasthan, Gujarat, the key markets? And also, secondly, your home online portal that you have. So you mentioned that you are serving both builders as well as the resale properties, because you mentioned brokers as well. So I'd like to understand what is the thinking there and how are you able to attract more brokers on your platform? Thanks.
Okay. So on the real estate, there has been a huge growth in this quarter for simple reason because of the festival also happening in this quarter, this year. And I think we tried to push the market a bit, and in some quarters market was also buoyant because of the elections happening in these markets. But the base is not that large. The overall contribution of real estate in this quarter is around 7%, not a large number that way. And the home online portal, we are registering the brokers as well as the direct consumers. We realize the revenue comes from the broker, but the hits come from the individual buyers. So we are trying to balance it out, saying that how we can get more of the viewers coming in, and yet the brokers, they give us the revenue from that.
So as of now on home online, the model is just advertising by brokers. Is that the revenue model for you?
Yes.
Or is the builder community also spending meaningfully there?
Builder is doing it, but what happens, builders, they do it through these brokers.
Okay. So mostly even for new properties, it's the brokers who are driving ad spends.
Exactly. See what happened, most of the builders don't want to deal one flat, with the consumer directly in our cities. So what happened, because the flat size is 10 lakh, 15 lakh, 25 lakhs. So they prefer a broker in between who takes care of the entire process that way.
Right, but that isn't the case in the newspaper, right, where it is mostly...
But newspaper are both.
Okay. So in the newspaper also there are brokers who spend meaningfully.
Newspaper broker adopts the classified route, the display classified route, which is a cheaper one for them. And the builders, they go by the announcing the project. So see how the advertising works in real estate. As a builder, I'll announce the project. I'll say, okay, I've got 200 flats, great location, great amenities and all that. Come and talk to us. So there are certain people, those who will come, see the project, and some of them will talk to the builder directly, and some of them go through their brokers to get the deal done.
Understood. Right. Thanks a lot for the color. All the best.
Thank you, sir.
Thank you. Next question is from the line of Prateek Barsate from Edelweiss. Please go ahead.
Yeah, hi, sir. So I just wanted to understand one thing. In terms of the various categories which advertise on the print revenue, was there any surprise this quarter?
Surprise, a bit of four-wheeler, bit of real estate.
Okay, and also one thing, so we saw the number of subscribers.
But actually speaking, the surprise was normal. It wasn't that we had to call for a party,
Okay. And on the digital platform, so despite the number of downloads increasing, we've seen the digital revenues go down. So is it the result of the increased competition in this space?
Downloads are increasing primarily on the app, and on the app, we are focusing right now on building great user experience. So there, our advertising load has come down. So we're loading less number of ads on the app. As far as the app is concerned. And on the other side of the business, which is social direct, and there, as I said, our social revenue has come down because of both. The traffic has come down from social, and also the realization has come down from social. We've seen a huge drop in realization in social. But the other categories, which is direct traffic, there the realization has gone up.
Okay, sir. Thank you. Yeah.
Thank you. Next question is from the line of Ayaz Motiwala from Nevalis Partners. Please go ahead.
Yes, thank you for the opportunity again. Two questions on the business quickly. One is the emerging markets, as you call them, such as Bihar and parts in Rajasthan and Gujarat where you're taking initiatives. One, you've explained that you keep chipping away through things which verified, such as ABC or NRS, IRS circulation, etc., and you get your rates increased. And the other is the way you compete in the marketplace. So what is a sort of a marker or a level at which you decide that we've got enough of market share in terms of circulation and this is a time to monetize now? If there is something of that sort on the business, if you could share, if we can appreciate and understand that.
Okay. So frankly speaking, this markup depends on the market to market. For example, in Madhya Pradesh market, we have almost 70-75% market share in terms of circulation, And we know we are getting enough advantage of that in the revenue. But that is not making us complacent that we say, okay, we'll not grow any circulation there. Within Madhya Pradesh, we see any opportunity in any particular pocket, we certainly go and work on that. While in Rajasthan, as you know, our circulation market share, we have long way to go. So we're still putting a lot of effort there in Rajasthan and as well as in Bihar and Gujarat.
Okay. Right, so it's as you see the market, and there are always pieces of pockets where you can keep growing circulation as
yes.
you sound.
Yes.
Right. And one other question on the business, as on terms of again back to medium and long term implication. You said that these things will coexist. The younger guy does not take a decision to buy a newspaper in his house. Reads it probably in the morning, and then he's connected online while going to work or in the office, etc. So, in the way our world is sort of going towards, hyper-connected, and thanks to Jio, lots more happening with free or cheap data. How does a newspaper stand the test of time in terms of, updated news versus the depth and quality of news? How are these things sort of, collaborating or working together? And how would your journalists sort of change tack over time? Will that mean that digital and press journalists sort of work together and they borrow stories from each other and it goes that way? How should we be understanding this business now?
Okay, fantastic. Great question, and I must answer you in detail. So what happened, as you know, in last 5 years, we all realized that the newspapers are no more into the breaking news business. Because we come out in the morning and during the day, if something happens, social media or some of your friends will break the news to you through WhatsApp. So by the next day morning, for example, yesterday, one political announcement happened by one leading party in India. And you knew about everything through your social media, Twitter, or all the news apps informed you, whatever. Now, we had a challenge this morning. How do we handle it? How do we ensure that there's a huge interest of our reader while reading the paper? So today's paper, we can say that the reader actually had to spend maybe a couple of minutes more to go through the entire interesting detail, what we mentioned about that, why this thing happened, and what is the background of that and the presentation of that. I think this is what the core of the newspapers in India now. It's not about Dainik Bhaskar alone. I'm happy to say all the newspapers in India, most of them are working like that, because they all have understood that there's no point just giving you a news in the morning which has already been known to you yesterday. So everybody has changed their approach in the market. And there are a lot of things which we have done, being the pioneer in the industry, and every other newspaper is doing so. And if you are a reader of a newspaper, you will understand that why people still want to spend that 35 minutes, 40 minutes in the morning to read the newspaper and say, yes, I got something out of it. Yep.
It seems that the participant has moved out of the queue, so we'll move to the next question, which is from the line of Rohit Dokania from IDFC Securities. Please go ahead.
Yeah, hi, thank you. Good afternoon. Thanks for the opportunity. Just one question from my side. So you were obviously hinting at, the ad growth outlook improving. You're also saying that, newsprint prices would be sort of low next year compared to the average of this year. Both these things are very positive. So building on this, how should one think of margins in FY20? I mean, we were at 24% in FY18. We are now at 21% in the first 9 months of FY19. How should one look at FY20 margins if, you can throw some light on that, please?
So, frankly speaking, what we are looking at that how do we increase our top line and how do we reduce the middle line. Now, the impact of that comes onto the bottom line, So we are not really looking at the bottom line alone. We're saying if we are able to handle the top line and the middle line, the resultant will be bottom line, which will be known to us as the time unfolds.
So I understand. So okay, if I may ask it differently, I mean, if you can give some color, in terms of a broad range also as to where you are looking at, ad growth next year, because typically after a heavy after a heavy election year, the year after the election, there could be some sort of slowdown, from the government, but this time it's a unique year because we have got a 25% ad rate increase as well. So from that perspective, if you can just help us from a modeling perspective as to how one should look at ad growth in FY20, that will be very helpful.
So there are two ways we are looking at the ad growth. One is the government bucket. Fine, government has given a particular rate increase and see how it can be panned out. That's one. Second thing, we are looking at the other category like automobile, healthcare, real estate, FMCG and all that, and seeing that how are those categories performing in the market. How are those companies able to sell their product in the market? How is their profitability? And how we can work along with them to see how we can get the advantage of their growth in our markets. So I will not just depend on the advertising from the government alone.
Sure, but there's no range that you can talk about, basically.
I wish.
Okay, thanks. Sure, wish you all the best.
Thank you.
Thank you. Next question is from the line of Yogesh Kirve from Batliwala and Karani Securities. Please go ahead.
Thanks for the opportunity again. So just one sort of clarification. So the government advertising, so what is that as a proportion of the overall revenues? Did you say it was about 10% for the quarter?
For this quarter, Q3, it was 10% without counting the election into it. But otherwise, if I take it YTD December for the 3 quarters, it is at 15-16%.
Okay. And this is typically the normal numbers?
Yeah, government stays at around 15-16%. And in some quarters, if the private guys don't do well, the percentage of government goes up to 17% also.
Mm-hmm. So when you say government excluding election at 10%, so you are basically saying there's some part of government advertising related specific to elections, right?
Yes, political election, the Congress party releasing that, the BJP party releasing that.
Okay. And so going into FY20, I mean, do we see any sort of risk to the government volume that could nullify these rate hikes? I mean, in terms of the volumes falling, so I understand a lot of tenders happen through online route these days. So is there any risk that we should be aware of in terms of the volumes?
See, nobody knows what the government will do. But ideally speaking, they have already brought down a lot of tender advertising. It's hardly, if you look at from the DAVP business, 95% business display classified, display ads from the government. 5% is only the tender business. So I don't think government can further go down on the tender because there's hardly any tender left there. In fact, when we look at the government business in our paper or other paper, we believe government has missed out a big opportunity of cutting down the volume of the advertising in last many years in the print business, which I'm sure they will be realizing it, and that's the reason they've been able to give this 25% rate hike, and we are positive that volume should also go up by them.
Mm-hmm. So in terms of the classified contribution, what it used to be at its peak?
Which one, sorry?
The sort of DAVP, so you said about 5% currently is coming from tenders.
In good old days, it was 50-50%. 50% tender, 50% government announcement ad like display ads. But I think in 2015, they took a call to reduce the tender and take them online. So that number came down.
Mm-hmm. So that until 2015, it was about 50-50.
15, 16, 17, 18 has been coming down. The tender business has been coming down.
Right. Sure, sir. Thanks for this.
Thank you, sir.
Yes.
Thank you very much. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Pawan Agarwal for closing remarks. Over to you, sir.
Thank you all for your participation and time on this earnings call. I hope that we have responded to your queries adequately today, and we'll be happy to be of assistance through our Investor Relations Department headed by Mr. Prasoon Pandey for any further inquiries. Thank you and have a very nice day.
Thank you very much. Ladies